Hello, my name is Raitis and you're here at Farewell Total Return Investing. And today we're going to do our usual week evening commentary, and let's dive deep into our today's trade. If you watched the weekly outlook plus trade breakdown of today's trade during the New York session on the indices, then we will break down this trade. This trade turned out to be a loss, and we will introduce a new protocol for today's trading and how you could have better managed the trade or how you could have avoided a loss. With that said, I hope you enjoyed the video, and if yes, then please leave a thumbs up and subscribe to this channel. This would support a lot. And now you can see I'm going to pull up the Discord chat right here. You can see I sent out the trade as we did the weekly outlook. And yeah, this was basically the trade. I don't have to go in depth into that. Just watch the weekly outlook plus trade breakdown and analysis. I already wrote that we are seeing disparities between the equities, and this is the key point which we will talk about and how you could have better managed the trade. So again, just a quick recap. We traded a long on ES. We had institutional sponsorship higher from a key higher time frame level, which was the weekly rejection block. We traded below that and saw this placement higher from there, and I wanted to trade a reversal trade into the 1 hour fair value gap coupled with a two weekly levels and a monthly level. So I wanted to trade this discount into premium. This didn't play out. Stop loss was below the 50% and the consequent encroachment. This was my only trade. I didn't re-enter. I did nothing. So yeah, you can see the market is rallying right now. During London close, we saw one more push higher, but then after that, I was done for the day and I didn't want to risk any equity anymore. I thought I would wait for Wednesday, and if the market displaces higher, then I may try a trade tomorrow with like half of my risk, which I used today. Even if I said tomorrow is actually not a good day to trade because of the 10 post 10 a.m. news filter. We have a 10 a.m. medium impact news release. That's why there may be a opportunity in the market, but it's going to be really tricky tomorrow. That's why please preserve equity tomorrow, or you may very likely go on tilt. So let's get into the analysis and how we could have avoided the trade. Basically, this is just a simple fact of intermarket analysis. You can see we basically entered the trade at 9:15, so 15 minutes before New York opening bell. Again, we didn't do really worse in the asset selection. NQ was a complete disaster. If you would have traded in Q, this would have been at least a partial loss. On ES, we could have went out with a break even, and I'll tell you why. You can see YM was the better trade. If we had taken YM, yes, this was a personal preference to not trade YM. Even in retrospective, if you look, we had the leadership on YM. If we compare the lows from start of London session, you can see we had consequent higher lows and consequent lower lows on NQ, and then one lower low and a lower high on ES. So YM had the intraday relative strength on its side, and if you would have traded this trade, this would have been a very nice trade. Stop loss could have been somewhere below the fair value gap right here, and it would have been a nice 1-to-3 risk reward ratio, buying the 1 hour fair value gap right here, coupled with the order block, coupled with the 15-minute fair value gap. That's why that would have been a nice trade. And stop loss would have been below somewhere this fair value gap for reclamation. And yeah, so let's say we didn't want to trade ES. That's perfectly fine. How would we manage to not get a full stop out on our ES trade? So basically, it's very simple. If a close, so the new protocol I implemented from today's trading session in my actual trading model is if a closely correlated asset trades into a lower time frame target objective, 1 hour or 4 hour liquidity drawn liquidity. Okay, it's basically the same. And our asset that we chose is not at target, go risk free as if possible. What do I mean with this? So you can see, let's quickly check the exact minute when YM traded up into its target, which is, so we have YM here. Oh, sorry, this is not the today's trading day. So this would have been our H1 liquidity draw, as you can see. And we traded up into that liquidity draw at exact 9:32, 2 minutes after New York opening bell. What was in ES doing at that time? You can see ES was still right here, 9:32. This is the candle. So at this point, you would have went break even when we closed this candle because YM was already at its target, at its H1 liquidity draw, while ES was far, far, far away from its H1 liquidity draw right here. So go break even. And we saw disparity as well from the start of the session. You can see YM rallied higher straight away. NQ, let's look at 9:30, rallied straight away lower. Here is 9:32. We are already somewhere below this low right here on the 15-minute chart. It also looked something like this here. You can see 9:30 candle closed right here already. While at 9:30, ES candle was not so bearish and we were still trading at the open of the fair value gap. But again, at 9:32 on YM, we trade into our target right here. ES at that time is still around entry, which is disparity inside the marketplace. So again, I can read you. I'm gonna read one more time out loud my protocol so you can write it down. If a closely correlated asset trades into lower time frame target objective, 1 hour or 4 hour drawn liquidity in brackets, and then our asset that we chose is not a target, go risk free as possible. Let me copy and paste this right here. So if you want to implement this in your trading, which I probably would recommend you to do, because this really happened a lot of times. I already noticed this in the past, and I don't know why trading is lying. But this is my new trading protocol for as a trade management protocol checklist. So this is in my trade management section of my trading model. I implemented this from today's trading session, and that's great. We took a loss, but we learned out of this loss, and that's the biggest thing you can do, because many traders, they just ignore the loss. They try to completely look away from the loss, don't recognize it, try to think it away, and then they don't even learn from their mistakes. That's why they repeat every time the same mistakes. And what we are doing here is we learn from our mistakes, we implement the mistakes, and form protocols so we can avoid these mistakes going to the future, so we don't repeat the cycle of doing them over and over again. With the protocols, we're raising awareness around the mistakes we did, and we implement them going to the next trading days, weeks, and months, and hopefully a lifetime. So, with that said, this is how we could have avoided this loss. And with going forward, we will avoid these kinds of losses with that new trading protocol. Now, the video is already over. I covered the trade. Now let's quickly look at DXY. Beautiful, beautiful, beautiful. As I said already, we're selling off from the daily fair value gap. I think we can reach below Monday's low and into the daily weekly fair value gaps, busy consequent encroachment, which is a daily rejection block. I think this can be our short-term drawn liquidity, which is also a long-term to near-term drawn liquidity. Wow, T-note futures really bullish, amazing, up into the high of the weekly fair value gap. Let's see what we can target next. Also monthly order block open, which we outlined today. So we have to be careful buying T-note futures. Market could distribute a little bit, and yeah, that's kind of risky to look for continuation trades right here. That's why market offer retracement, or you wait for a displacement above this key hard time frame level, where we close above it and then see new sponsorship from the premium array. So if we can invert this premium array, then we're off to the rejection block and the high. And yeah, euro follows. If dollar is bearish, euro is bullish. You can see euro USD was bullish because euro GBP is bullish today, so euro has the strength while GBP is weak. That's why optimal longs were on euro USD today. You can see kind of a seek and destroy profile, ran lows, ran highs. And why I decided myself against from trading, taking another trade. I was looking maybe for another trade on YM, but I just recognized, you can see we're taking out a buy side, sell side, then took out buy side again, then took out sell side again. I didn't want to risk any equity during London close. I didn't want to force any trades. I said I'd rather just sit out today's London close session and save equity for tomorrow's New York session or London close session, and I'd rather take a trade there than to trade this seek and destroy profile, because as you can see, we're taking out buy side again after taking out sell side, and we're back in the range. So horrible conditions. I don't want to make this video too long. I hope you found some value from this video, from my loss. Feel free to join the Discord channel, our first loss inside the Discord channel after 3 back-to-back wins. Now, with that said, I hope you have a wonderful evening. Check out the Discord link in the description below. Give a thumbs up if you enjoyed the video, subscribe, and we will see us tomorrow for another evening commentary or trade breakdown. And stay safe, trade safe. Bye bye.